26 years of CNBC TV18.
Welcome back. You're tuned into Bazaar Morning Call. And as promised, we have Dharmesh Kant, Head of Research at Chola Securities, who joins us on the show. Hi, Dharmesh. Good morning. Good to see you again. Well, Dharmesh, let's discuss a few stocks. Top of mind is going to be Biocon. You know, unexpected lines, or what the street expected, was Biocon Biologics business now has come into Biocon. It's going to become a 100% subsidiary. The equity base obviously goes up because of, additional amount of shares that will get issued. But what's your take on it? That holding company discount goes away, the leverage appears pretty okay, but there's a QIP as well overhang. Put everything together, your view on the deal.
Yeah, good morning, Nigel. First of all, happy birthday to you all at CNBC TV18 for 26 glorious years of unmatched excellence. And what is outstanding, Nigel, is that it's not only about unmatched excellence, but living up to the inch of expectation every day when you log on to your channel, and kudos to all of you. Yeah, coming back to, the Biocon thing, I think, see, if you look at Biocon, it's always been a overhyped kind of a company with much of expectations built into it. But last 10 years, if you look at the numbers, they've done hardly on the, profitability part. 9 to 10% kind of a growth has been, that's the best kind of a growth they have delivered. At the same time, the ROEs have been a mid-single digit. With this merger coming into play, it's not that it's value accretive or EPS accretive. I think it's EPS dilutive. First of all, the QIP itself will take care of the dilution. Secondly, there are certain expenses will go up because of the debt burden which will come into play. So 1 year or 1.5 years will go into this entire synergy to play out as per, Biocon's order. And the fact that they are doing this because they feared value, I mean, instead of unlocking it would have been value dilutive if it would have gone for, IPO proceed. So those are the caveats in place. Business will continue as usual, nothing great out there. So to my mind, I think I am expecting some sort of a correction on Biocon, and the correction is likely to stay for a year or so till things they come to the double-digit kind of a growth trajectory.
Dharmesh, hi, morning. Good to see you here on this special day. Just a quick word on, Upasana, I don't know if you heard, put out this information on PG Electroplast, but my question more was Keynes and actually what happened on Friday. Keynes, of course, is a singular case with specifics there, but market really taking the axe to some of the others as well.
Yeah, good morning, Prashant. I mean, it's more to do with the entire EMS play business-wise. There has been a deceleration in the entire EMS space that we have seen, be it PG Electroplast or the others in the play like Keynes, Dixon, Amber. Everybody is facing the heat of decelerating business growth trajectory. At the same time, valuations are not at all comfortable. They are pretty high. And there is a competition hitting up going forward, maybe in the next couple of years by L&T when they foray a big time into this space. So these were already riding onto the play. Keynes, I think that speeded up the selling pressure out there. And with PG Electroplast in particular, the much depends on the transfer technology tie-up with the Chinese company when it gets through. Still, the permission is pending. If that happens, then definitely it will be a different story in the entire EMS space to play out, because compressor technology of the AC is still elusive to Indian manufacturers. So that stands out. But to my mind, I think we can have, today the con call is there, you can have bounce back on some of these stocks, but it would be a bounce back rather than, a structural play into the making. So our call is to avoid the space for some time.
Stock down 43% year to date. Dharmesh, thank you for joining in. Short conversation today, but thank you once again for being a part of CNBC TV 18's journey. Now moving